The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, everyone. Beautiful sunny day here in Newton, Massachusetts. It's good to see, I must say. And the weather's warming up. Spring is in the air. Not quite here, but spring is coming. And we're looking at chances today that we might see some spring in the market, because what we're looking at, let me just show you this briefly, because I'm doing my webinar this afternoon, 4 o'clock to 5:30 for subscribers to my opening call. It's not just can there be new all-time highs in 2022? It is, what are the ETFs, what are the stocks, what are the currency, what are we looking at that can participate? What can still move up here, even if they consolidate for a little while? What patterns can be repeated that we look at? Remember, we're looking at fractals, the little patterns that you see that keep repeating over and over in all different time frames. It's like human nature. It's like a cell that expands and contracts, but it's the same pattern, and that's what we're looking at all the time. We've got this pattern right here. I call it the falling axe formation. What happens is there's a rally, a sharp rally. Dow goes to 35,372 to a peak D, the fourth highest peak. That's where other things can happen. Starts to pull back, goes under the 200 period moving average, a technique I'll be talking about tonight in the webinar. And then what happens is you basically got an expanding declining cone formation. But then all of a sudden it finds some support. If that support allows the price that you're following to break that upper downtrend line, that's very positive, because it could take you all the way back to each previous peak, or even to the peak that started off the major downturn. So for that to happen by next week, anytime next week, without really cratering and breaking under 34,000, 33,900 before then, by about a week from today, because we've got Good Friday we closed on Friday, you want to see this starting to move up. And now we've used up a lot of time, and basically more time than price, even though, yes, certainly going to the 34,100 from the 35,372 level, that's a lot of points. But really, when you look at the configuration of what we've been through since in February to the high of February, down to the low of February, and then in March we had that big rally, this is just a consolidation. And what you really want to see is some kind of strength form in enough stocks, in this case the Dow, enough stocks that's going to take it above that trend line. So those are a lot of ifs. I don't like to work on ifs, but you have to, if you're looking at market analysis, all you can say is, if such and such happens, then the consequences should be such and such. And that's what we're looking at. So most importantly, what we are looking at this particular point is that the S&P, the Dow and the S&P may peak D in the Chapman wave methodology. That's something we're always looking for. I'll be discussing that tonight. You identify a low bar that can start off a bigger move, and then you expect at least 4 higher peaks to the A, B, C, D. The fourth highest peak is D. Other things can happen at D. It can recycle and go much higher. That's where you can get your deep correction. That's where you raise your foot off the accelerator, you hover over the brake, and you reassess. And that's exactly what we got there. We've got the peak D and the Dow and the daily. I've got a whole slew of slides that show peak Ds, how important they are. SPX.X, that's the S&P 500. Peak D at 4637.30. End of March, pulls back sharply. Now underneath, second day in a row now, it's gone underneath the 200 period moving average. Both of the Dow and the S&P on sell signals. The S&P is real close to a sell mode. That's going to be a deeper corrective status. It doesn't mean to say it has to continue down. It just means that that's the status that it's achieved. The QQQ trading up $1.91, 341.41. Yes, it's a nice inside bar so far at 341.35. I don't want to see this under 338 in the next couple of days. That'll be very poor. I'd rather see it try to fill the gap, get to 348, obviously. We're looking at the IWM, the Russell 2000, also PD at the 200-period exponential moving average within the rectangle formation, just stuck in the rectangle. Rectangle can last, a sideways rectangle can last a lot longer than your patience. And here we are, peak D in the weekly chart after the long sideways rectangle. I'm going to talk about narrow rectangles and wide rectangles. What are the implications? In fact, while I'm talking about that, look at this. What was Tommy Jr. was using, speaking, the JPY, was speaking to Teddy Kakstad, and they were talking about things. And then when Teddy spoke about the USD JPY, I said, aha, the yen usually goes in the same trajectory as the dollar, not in the same percentage terms, sometimes more, sometimes less. Look at this. Talk about a rectangle, a large rectangle. It's gone to a leg D. This is the dollar. This is the US dollar Japanese yen currency pair. I'm going to be talking about these patterns. Look at this beautiful left side, right side price time action in a cup formation. It made what I call the lowercase h successfully forms a buy signal and changes from a negative pattern to a very bullish U type pattern. And look, it came to exactly the month of testing the high that was peak F back in June of 2015. And that's after going from 125 plunging down to the 90s, then rapidly going up to 118, then pulling back to retest at about 102, and now it's trading at 125.83, up 42 cents. So if you're interested in currencies, I'm looking at all these different things. This is the EUR, USD. Look, here we are. This is the same pattern inverted. It's actually just a big rectangle formation that's trying to rally. Here's the cup. This is the daily chart, and we're getting close to testing. Oh, it's actually gone 1 week later. I had this drawn ages. Many of you remember I drew this out. These are the patterns that we're going to be looking at tonight. You don't even need to know Chapman wave methodology. You just need to know you find a low, you try to identify some form of this doji candle at peak D right here in the euro-dollar currency pair at 1.2349 on the week of the 8th of January. Once we started turning down, pull back, and then ran up again in this little V-shaped pattern, it seemed that this left side high couldn't really be the midpoint, the plumb line. So I chose this doji candle. One of the things I'll teach about which candles to use, the doji candle. So it gave you an exact on the week of from March the 20th, week of March the 20th, 2020, at 1.06364. I like those numbers. We ran up, made a high 1.23 area, pull back, and then I used the candle of the 2nd of April. 2nd of April, I would say that's pretty much a year ago. And it made a little arch formation. The dreaded H failed. And then I drew in the left side, right side price time match. And it said that by the 8th of April, there should be a test of the 1.06, let me just double check, is that correct? 1.06378. And now what we're looking at, it's gone to 1.08. Look how close it's come in the same number of bars on the right side. So these are techniques that we're talking about. And let's get back to our story, because we wanted to talk about the TLT, talk about the breaking the lows, going to a trough D. I'll talk about the yields as soon as I return. Basil Chapman, Technicians Hour, Dow's up 28.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today And try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we talk about channels, and what I'm going to do tonight as well is I'm going to show how you can draw the Chapman inside track, propellant, repellent zone, and look how it's working right here. We went just under it in the TLT. You see this pink and green line that started off around about November, December of last year. This is the baseline, and mostly the TLT, this is the Lehman 20-year Treasury bond fund, held that price until 3 days ago, and then it broke under it. And I said, think of this pattern as having a very elongated, narrow channel, like a tube. Think of it, if you want to use a good example, look at ABV, how it broke above after being in this narrow up channel for ages, since January of this year on the daily chart, stuck in this beautiful up channel. And then what does it do? I said, it breaks above it. That break above it says that if it pulls back, it's going to start a really choppy phase, and then it could continue going higher, but a very choppy phase. And this could be what we're looking at here in the exact opposite in the TLT. Once it broke above back in February, around about the 22nd or so, it had just 2-bar spike, and then it kind of moved up, but it went right back in. And let me just, I use this as a Fibonacci, I believe, yeah, Fibonacci extension line. So we've got 300% right here. I'm using this as some kind of reflex action, because at 7%, you remember my rule of thumb, I'll be teaching this tonight as well in my webinar for Chapman waivers and subscribers to my opening call. I'm going to be talking about what are the implications and how often does it go flat, the stochastic go flat in the single digits as opposed to going flat in the 95, 97% area on the upside. What are the implications? Well, at 7.9% in the stochastic, the on-balance volume is really oversold. Everything's oversold. And I would suggest to you that today we could see the inflection point that you need to be able to say, within the context of falling prices, instead of having this one drop to the bottom, and within 2 bars, there's a rally. This time it hung around to really test weakness. That weakness, I would suggest to you, based on that AbbVie chart that we were looking at, and the TLT, which just broke this Chapman wave inside track repellent zone, and it become a propellant zone. Red candle today, down 39, ticks at 23.16. I'm going to suggest to you that this peak F that we're looking at right now, it turned out to be in the TLT. They don't always correspond, but look at that. Trough F, peak F in the Chapman wave. We're going to be watching this because I'm going to suggest to you that on the very short term, the stochastic at 91% in the TBT and the MACD very strong is saying if there's going to be a turnaround in the yields, it's going to need very much for the TBT to see a price move to the 22.48 level by about Tuesday or Wednesday of next week. And then what we've got is we've got the stochastic pulling back to about 83%. It needs to get under 80% and very quickly for this to be a failure. So I don't want to get in front of the move and say, oh, yeah, look, everything's turning out to be just exactly the way we looked at it. We were looking at this double top in the TBT. The previous high was left side, right side price time match. That was at peak D. Remember how important peak Ds are? At 22.60 on the week of the 19th of March of 2021. And we pulled back to 15. And now we've run all the way up about 8 points, and we've gone to a high today of 23.54. But it was just a little higher. Yesterday it was 23.70, and therefore what we're looking at is a leg D, a matching time price cup formation. You had the Chapman wave inside wedge target resistance line. It went just above it. Everything says, hey, this should be the turnaround in yields. But I can just tell you this, when the technicals remain strong, it says you could have a minor pullback, but you've got to be looking at this in the bigger picture. And the bigger picture says, look at the monthly chart, look at the W formation going from the slide that was occurring, and in the middle of it, on February 2020, you start that second big red candle to the downside. Well, now all we're doing is we're testing the high of that candle, and we're going into the one before it, but the MACD and stochastic are rising in the monthly chart, and that's suggesting that yields could go higher and that this is a very important inflection moment. So I like to put the pieces together and say, all right, this is the moment that we could see some kind of reversal in yields so that the yields can come down. The TLT starts to move from coming down almost every single day for days and days and days. It could have a decent rally. It's up $1.25. If you go to the TNX, there we go. The TNX, look what we've done. We've done the same thing, leg D, peak F in the daily with a Chapman wave inside track repellent zone. We've got a long-term, look at this, talk about a long-term price movement. This is completely different to the TBT. This is a whopping leg C in the 10-year Treasury note, and the MACD is good. Stochastics at 85% in the monthly. And look at this beautiful left side, right side price time match. I chose a particular candle right there. That was the midpoint the week of the 7th of August 2020. And here, who would have thought that you could go all the way? We're actually now a little bit longer in time, but we've made it in price. And look at this Chapman wave inside wedge target resistance line right there. We're touching it as we speak. So everything's in place to say, wow, maybe this afternoon the Fed says something, just anything to at least ameliorate the tension that's there with the higher prices. And now I'm going to go to crude oil, because why? We're also doing something very similar in crude oil. Look at the monthly chart. We made a peak E at 129, the daily chart, on the 7th of March. Plummets down and makes that dreaded H pattern, but is so far successful. Hasn't broken on the left side. Crude oil is trading up $1.25. Peak E, I believe, in the weekly chart. But look at this. Price time match going all the way back. Remember, there are techniques that you can use in what you could call either a cup and handle or whatever pattern it is. But I like to use price turning points that are inflection moments where it deflects from one direction to the other. So I had chosen the whole 89.72 area. Was that, sorry, didn't mean 89. I meant the whole area of 2011 in May. I couldn't remember what the price was because it gets smoothed out as crude oil continuous contract. That was 143.04. And I went all the way back to the candle to bump into the candle of the Russia invades Georgia, August of 2008. And at that particular point, that was August, but the high was made in July. So the following month, we had already seen prices decrease, but that was only, 10 days or something? And then Russia invades Crimea, February 2014. There it was just 5 weeks, I believe, and the prices held and then broke down. This is something different, but the price point that I chose says that this is the level that we're looking at right now of 129.17.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're looking at Patterson. I don't know what that says. The UTI Energy. I think that's what I can see. UTI Energy. Question in the YouTube, Tiger YouTube. It's trading at 16.98, up 33 cents. So there are so many charts like this. And this is what I'm going to suggest to you, and I'm going to be talking about it in detail tonight. Looking out longer term, that whole energy sector, I think that it's getting close to a point where there could be some kind of a pullback, and that'll happen if maybe we get the yields start to decline. Maybe oil just kind of settles down, so that some of these whole energy sector stocks, and I don't know where exactly which energy group it is in, it's out of the rectangle formation just barely. But my suggestion is that this kind of pattern says that the midpoint, in this case, the 1512 to 1560 area, 1612 to 1560 area, is probably going to be the big test of strength. And that looking out of the monthly charts, because they've improved so much, and in sectors, you don't get sectors that just have a kind of a sudden flurry of activity. Normally there's a big buildup, and what I'm going to try to discuss tonight is the relationship, because I want to do many of these oil we would like to get into on a big pullback, some of those nice good dividend stocks in the oil multinational particularly area, and certainly in the service area if this is where it is. And what I wanted to say, look, I just did this in Chapman notation in the monthly, daily, and weekly charts in a brief break that we had, so it doesn't take long to do. But most importantly, the patterns that we're looking at are repeating. Look, if I go to CVX, same thing. Rectangle formation makes a peak E, pulls back sharply, and then goes peak A, B, and then a minor A, B underneath it. Combined C that says an overlapping wave should go to at least a D and then pull back. Yesterday it made that peak D under the previous high, stuck in the range. If you look at the rectangle, unless there's going to be suddenly just something that just is an aberrational action that makes oil even scarcer in the next week or two, I think we're in for a consolidation. So the question is, yes, I like it. Keep in mind, I'm going to put it down as another one that is worth looking at. PTEN was the symbol. But I don't really want to go into the oil stocks. If you look at GIS, look, GIS is General Mills. It also is in a kind of a rectangle formation, almost a V shape, but a rectangle formation in the weekly chart. But all of these, I'm saying this, and we're going to be doing some of the work tonight, they are all up against resistance levels. Look at this beautiful cup formation. It's slightly off center, so it's I call it the gravy cup because it's got a lopsided, sharper slope on the one side and much longer on the up. Goes to a leg E under the 72.95. How many times have we seen over the past year and a half, I've shown you charts, that have double topped, at least shorter term, right at the previous high? So the 72.95 in July of 2016, General Mills, GIS is a symbol, plummets down to the 36 area, and then goes steadily in a stair-step move to the high of 2 days ago of 70.96. So it's within 2 points after all this time. 2016, almost 6 years, and look where it came to. So I think that a lot of these stocks that look good for later on in the year, on the shorter term, should be pulling back, and that just gives me a sense that one of the reasons why we've stayed long the Dow in our latest iteration of the buy signal to buy mode, back under 33,000, is because I think there's enough residual strength just to see over the next coming days, it goes into next week, whether or not there's going to be another big breakdown for an arch formation plummeting on the right side, or whether we find some support. This is not the move that takes us to all-time highs. This is the move that says you're in a really choppy April. And this is where you get sector rotation. Duffy in the Den says, you, well, back to you too. But look at this, is energy fuels, uranium, beautiful move today, up 54 cents, up 5.39 at 10.55 for subscribers. For those of you who signed up for my webinar about a week or so ago, hopefully you're in the ballpark, because we have a particular stock, also in the uranium area, that's gone really well. I mean, even today it's up 5% already. And so we're mostly in the commodity area, a lot in the commodity area. Our gold stock's doing nicely. I'm trying to mix things up. For instance, today we went to a stock we bought at 248. is trading at 250, 249 or 250 at this point, up a little bit. But it's part of an initiation into this kind of this particular area. I've loved the stock for a long time. I missed the last few days, just had a big move to the upside. I still like it. It has a beautiful cup formation that says over a period of time it should go even higher. So what we're looking at tonight is not just how would we get to higher highs in 2022? What particular patterns are we looking at? I've just showed you a whole bunch of patterns that are really important. Another question was, could I have a look at, where was it? Let me just see. Oh, goodness, I'm scrolling. I must say, I'm getting used to this new system okay. Yeah, CCJ. CCJ is acting very well today. That is Cameco Corporation, Uranium Energy, also going very nicely in leg D. So a lot of these are in the Ds. So I'm just going to suggest to you, you've got to be a little careful. You've got to be a little more selective now. At the same time, you've got to be looking at positions that you take to say this is the area that's in vogue, and therefore any pullback should still have pretty good support at what was previously a high, in this case the 27 area for Cameco. So at 32 it's doing really well. Leg D in the daily, leg E in the weekly. Beautiful cup formation. I drew in the left side, right side, price time match. I'm going to teach this tonight. Look, there's the Chapman wave inside wedge target resistance line. It broke out above it 2 weeks early, and there it is on its way. Look at the MACD in the weekly chart. Beautiful disparity between I call it the aperture between the green 9-period differential in the MACD and the slower moving average, the red 26-period moving average. Look at the stochastic flat at 90%. So yeah, let me just do crude. Let me do high grade copper. I didn't do that in the break. It had a nice pop earlier today. It's pulling back at 4.682. It's stuck in the range. I talk about this. This particular big rectangle formation can see a move up to a peak D. That's where it could start to fail. If it fails underneath the previous high in a peak D, be careful because it could pull back quite a bit. That's what it's doing. Look at the rectangle formation in the weekly chart. That's a long diagonal, a long horizontal narrow wedge. A wide wedge if you're in it, but if you're looking historically, it's a narrow rectangle, and then it breaks to a leg D, peak D, and comes back into the middle of the rectangle. And look at this high-grade copper. Once again, the monthly charts, what are they saying? Beautiful move up to the high that was made in 2011 at that long-legged doji candle. I'll be talking about candles as well. Right there on the 28th, this is February of 2011, plummets down to 2020, it goes to $2, and then it goes right back and it retesting the peak C, well, leg C, because the month isn't finished in copper. So copper's still acting, holding really well, very much like wood, the iShares, the timber and forestry ETF. That hasn't broken down. Dow's up 49, S&P's up 11. I'll be right back. Basil Chapman, getting ready for the webinar this afternoon at 4 o'clock. Sign up early so you can get in. A wonderful meeting.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Dow's only up 14, S&P's up 6. This is a real struggle. There's a lot of selling pressure here, but the areas that have been on fire for some time are still working very well, but we're just starting to see that some of the defensive stocks, as I showed you, General Mills, etc., they're just getting to an area where there should be some kind of a pullback. Just a digestive phase at first. We'll see if it's deeper than that, but at least a digestive phase. Bitcoin is up with 1410 today at 40,700. We've had it in a sell mode. I have a whole segment tonight on the peak Ds. How many peak Ds? Look, monthly chart peak D in the Bitcoin futures, 69,950 peak D in the weekly chart, the week of November the 12th. And it's making the H pattern right now. Peak D in the daily chart in a big rectangle formation. I just think Bitcoin is stuck for now. It's just stuck. Think of it as stuck. That means as a short-term trade, fabulous. But in the bigger picture, there's a lot more work that needs to be done. And until it starts to trade for 2 weeks out of 3 above 50,500, I think this is going to be just a wonderful trading vehicle, intraday type things, or maybe a swing trade. But I don't think the big move is going to be coming for a little while. With that said, did I do gold? I don't think I even did. Yes, I did. I said gold was acting well. It's up almost 6 points at 1981. It broke out of that rectangle formation, sideways consolidation, and now it's actually in leg B. The MACD has crossed positive. The 9-period moving average daily is crossed positive. The stochastics at 75%. I need it over 80% to say that confirms everything. On balance volumes looking very good. And one of the reasons why we added to a particular very low price gold position the other day is not that it's a leader. It's actually not. It's going to be dragged up by the others. I want to play the percentages with not putting all. We've built up for subscribers to my opening call. We've built up a big cash position for a while now. We might put it to work with very short-term trades, but basically we added this morning on a stock that's up in a triple digit in the $248 area, but it's part of a plan that says we're starting here, but on a big pullback, we want to add the next position, and that's one of the positions we're getting looking out, because this, in really good times, this stock should go up much higher. In really bad times, this stock should go much higher. The products that it has are all in demand, regardless of, let's put it this way, regardless of the mood of the country, So, all right. But other than that, I'm trying to get single-digit stocks that have really, for instance, one that we just got a few days ago, up 6% today. I like that. Another one that we've got, a very low price in the very low 7s, is in the 8s right now. I like that. I'm putting money to work, but on percentage gains, not using up all our capital, because there's going to be a point where we want to put a lot of capital to work, and I'd rather be doing it in specific areas, specific stocks. Just someone quickly said, could you quickly look at your grains? Yeah, wheat had this huge move. Chapman wave, I don't know if I'll even talk about it tonight. Yeah, maybe I will. Chapman wave Roman candle doesn't happen all that much at highs, and that worked beautifully. And we plunged from the high of the 8th of March at 1363. That's on the continuous contract. That price could change. It plummeted all the way down to 960s, and now it's trading at 1,098. It's down 5.5 today, but yeah, it's in this range. It's doing okay. I think these wheats and the grains have to consolidate. Soybeans consolidating. The big rectangle made a peak D under the previous high. What was the rule of thumb I was talking about just moments ago? There it is in practice. The peak D in the weekly, but only a B. A peak B in soybeans continuous in the monthly. That says, whew, these things can go a lot higher. Corn. As we say in the Boston area, corn is acting pretty nicely. It made a peak D high on the 4th of March at continuous contract 782-ish area, pulls back sharply, and now it's gone to a brand new peak A. There's another A because it didn't break that. And then it goes to a B. I'll call this a gray B until it breaks above that. And then I have to include it as an E/whatever it is. But it's in a rectangle formation at a high level. It says it could continue to consolidate for a little bit longer. So that's that. I did that. Look at bonds. Let's just do that, because the only thing I haven't shown is actually bonds. Bonds did the dreaded H pattern in the monthly chart. This is the first time that you got a really decent green candle in about 2 weeks, and it's up. Woohoo! It's up 25-30 seconds at 143 and 730 seconds. As I said, all the ingredients are here for at least a bounce, but the weekly chart is saying, I don't know, bounces are one thing, but yields are going higher. And the monthly chart says, you can say whatever you want, but yields are going higher. But in the meantime, on a shorter term basis, I think this could help certain sectors of the market. So the XLF, sorry, I didn't get to that. Joe wants to know about the XLF. XLF, we took very nice big profits in our Bank of America stock that we had for a long time, from the 31s. It ran all the way to the 50 area, double top. How many times have I spoken about these exact double tops? This is the XLF. It's hit at 41.70 on the 13th of January and made a big H pattern, and then it plummeted down to the 35s, and then ran up again to 40, and now it's at 37. And the reason why, for Bank of America, we've done this for maybe 5 or 6 years, where what I do is we try to buy it at one of the lows, and then we hold it for a long time, and as it comes down, we just take profits, and then we're out completely. And this time, we waited longer to get in. Then we did get in at 31, and it screamed up to the double top right here, 50.08 on the 10th of January, pulls back to 42, right on the 200-period moving average, runs up in a V-shaped pattern with a left side, right side price time match to a peak D at 50.11, 3 cents higher than the previous high, also a peak D. How many peak Ds have we seen? And then what does it do? You see the way I've measured it? The left side was strong on the technical side. Look how weak it was when it went to peak D at 50.11 about the 8th or so of February. And now look what it's done. It's gone all the way in the arch formation to 38.21, runs up to 44.63, and now it's at 38.59. Hit it low today is already 38.36, just above the previous high. Is this going to make a double bottom? Well, earnings come out on Monday, but the reason why I just didn't like the action. I said, no, we are going to take profits. We're out of it. We've had gains in this all the way from just a smallish percentage 20% or so, all the way to, I think it was a 50% gain. I might be wrong. And then we just got out, the final part that we got out was 25% gain. So now what we're looking at is within the, no, it couldn't have been 31. It couldn't be 50%. I'm sorry, I was wrong about that. 35%. So what we are looking at here is that this arch formation is going to test the left side low. But if yields have been screaming to the upside, why did the financials plummet from that mid-March level to where we are today? I think that the earnings, I keep saying the earnings should be great. I think there's a little bit of a problem with the financials. So we can always get back in. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let me just do this ExxonMobil question in the den about ExxonMobil. I love it longer term because I think it will go to test the high of July of 2012 at 104.76. It's trading right now at 86, but on a short-term basis, I think it's in this consolidation phase. Long-legged doji candle in the daily, in the weekly, daily made a peak D, and now it's underneath it in this rectangle formation. It's kind of working hard. So that's that. And the next question was, I love that question in the TFNN Tiger YouTube. About the EPV short Europe ETF and EEM. I'll do that tomorrow. I'll treat tomorrow like Technical Friday because we won't have a Friday, so tomorrow I'll do that. But that's a really good question about shorting Europe or what's going on there. So that was that, and I just wanted to quickly say Yeah, there are a lot of E's, GDXs. Exactly. We're looking at all the commodity area, making these rectangle formations. Do they break sharply above, or do they come back in? I think they're going to consolidate in the shorter term. So, a couple of things. Sign up now if you want to do my webinar this afternoon. And the fact that I do about 40 minutes to an hour or so on the weekend for my update webinar, I don't have to do everything tonight. So it's going to be really specific. It's going to be chart patterns, stocks that can, what are we looking at? Why is this so important? Let me just really quickly get to this. If I can just get to it. Yes. So this is what we're looking at. Is it possible for the stock market to make new all-time highs in 2022? That's just the title. It's all the technical stuff, the veracity of all the technicals. Look at this one technical indicator, the green line that is being green all the way from 2010 in the S&P to today. Even with the 35% decline in 2020, it didn't change to pink, not even once. And that's I mean, sentiment-wise, would you have stayed in this all the way through? Well, some of us have positions that we've had since January of 2020. Anyway, so I'll be back at 4 o'clock for my webinar. Please go to this. If you want to sign up, you can